I think there might be work that the bond vigilantes will continue to do in the next couple of weeks. At this point, there's not enough that would really change policy, but there's a real reality that we might have yields continue to sell off such that it makes policymakers blink to some extent, but we are
yields
far
higher,
from there.
To be clear, yields higher, price down?
Yields higher, price down, but we are not there such that at this point, the bill will continue to move on until this happens such that it creates a big sell-off in equities. This is not our base case, but there's a real possibility of this.
Is a 5.13 30-year bond an 8% mortgage?
I don't know. It's not good for the folks that are going to go out and try to buy a house this weekend. So, Stephanie, what are you guys thinking about this economy here? I mean, again, as we think about the tariffs, I was just reading a note by Torsten Slok. He makes it very simple. You know, tariffs were about 3%. Now they're on a weighted basis about 18%. That's got to impact the economy. Do you guys have a recession call out there, or do you just have a slowing economy?
We don't have a recession call. We're looking for, actually, growth could be above 1% this year.
Really? Okay.
Somewhere between 1 and 1.5%. So you do have a big tariff hit to the economy. With the rollbacks of China, that was significant.
Yep.
So tariffs could weigh on the economy by about 70 basis points, but the reconciliation bill has a bit of a positive impact as well.
Why?
Because the business provisions do get pulled forward into 2025. So about 20 basis points.
So it has stimulus, like COVID type of stimulus effect?
A lot more modest this year. Next year, we should have actually a decent amount of stimulus from this bill. Combination of the business provisions as well as the individual provisions, things like no tax on tips, no tax on overtime. That really has an impact next year.
So that this all flows down to the consumer, which of course is 70% of this U.S. economy. How is the consumer out there from your perspective?
So far, the consumer's okay. Nothing that bad has happened to them. Yeah. Jobs continue to grow. They continue to have solid wage gains. And unless that changes, the consumer will continue to chug along here.
What's the biggest mystery of your Wolfe Research forecast? You got an Excel spreadsheet. She's awesome at Excel.
Yeah.
She does formulas like no one. What's the biggest hole in that Excel spreadsheet? The biggest secret?
I think the real question is the multiplier effect from the tariffs. So you could say the tariff dollars raised every dollar that gets raised from tariffs has a $1 impact on GDP. That's kind of the more extreme outlook, in which case you could have a bigger negative impact on the economy this year. Or you could say it has a more, the lower end of the range, kind of 0.5. So for every dollar that's raised in tariffs, it's about a 50-cent hit to GDP, which would then make it a lot more modest. And the real impact here, or the question is, to what extent there's uncertainty that really weighs on the economy. And being that Trump has pared back the tariffs, it suggests a slightly lower multiplier on this.